Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm excited and grateful for life to be with you here this morning as we take another fresh new look at the financial market. But before we begin the session, let's run through and confirm that we are good to go this morning. If you can see my screen and you can hear my voice clearly without distortion, please let me know in the comment section by typing in hi. This will give me a positive feedback that we are good to go this morning, and if there are any issues whatsoever or a distortion whatsoever, please let me know so that I can do the appropriate adjustment to make us have a better experience out here. So I will be running through the comment section to see if there are any questions whatsoever before we if there are any issues, and I want to be seeing your highs before we kickstart the session. So loading up my chart right now. So we have 3972. Good morning, thank you. But the loading, all right. I can see 2045 6422. Okay, Carrie, good morning to you. Thank you very much. Okay, Mr. Code 500. All right. Okay. So I think I will be taking this as a confirmation that we are good to go this morning. So my whole name here is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we take a fresh new look at the financial market. And in fact, in preparation for today's trading session, I have conducted a comprehensive price action based technical analysis on all of the assets on our watch list, utilizing simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of these assets. So far this week, we have been monitoring 4 financial assets, which are the USOILSPOT, the USTech100, popularly known as NASDAQ. We also have the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. So these are the main 4 assets we have been monitoring since the beginning of the week, and in the next 1 hour we are going to be reviewing how well they are doing, see how we are going to be managing our existing position, and at the same time get ready for the New York session. For those who are joining us for the first time, you are highly welcome on board, and I'm always grateful and glad to have you around. Well, you might be asking that what is it that we do here? Well, we come together as traders, come together as a community in anticipation of the New York session. And during this time, we review our assets. We also strategically position ourselves ahead of the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And one thing I would like to tell you here is encourage you to stay tuned in till the end of the session, as the more time you spend with us, the better you get in understanding how this works, and you will be able to use the information you have gathered here to make your own independent trading decision. So once again, you are highly welcome to X-Trend Speed Live. So with that being said, here we shall be diving right into the business, and as usual, the first thing we are going to be doing is to check on the economic calendar. As we all know, these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. Now, on the economic calendar, what we normally do here is to focus on high impact events from the economies that affects the asset on our watch list. And for this week, the economies we want to be looking at is the US, the United Kingdom, and of course the Japanese economy. Now, since in the last last 2 days now, we do not have any high impact events, so we had to include the medium impact event so that we can have a scope of what majority in the market will be looking forward to, which of course will be influencing the sentiment in the market. So for yesterday's event, we were anticipating the unemployment rate data from the Japanese economy, which came in way beyond expectation and against the previous data of 2.5%. So we had a 2.7%, which were more higher than that. So it's a sign that the economy, the labor sector, is not that promising at the moment. Then for today, Tuesday, August 29, we have three medium impact events from the US economy. The first one here is coming up in about 2 hours from now, and that is the Housing Price Index. This is released by the Federal Housing Finance Agency, and it provides an estimated value of housing market conditions. It is an important indicator as the housing market is considered as a sensitive factor to the US economy. And generally speaking, a high reading is considered to be positive for the economy, hereby dovetailing to a bullish US dollar. Now, if we look at the previous data that came in here for the month of May, for the month of June, or for the month of May, sorry, it came in at 0.7%, and economists are projecting 0.2% for the month of July, which is a little bit, which is way below the previous data, and it's a sign that that sector might not be looking promising at this point in time. So we are going to be looking forward to what the actual data is going to be on that one. Then later today, again about 4 hours from now, we have the consumer confidence, which is released by the Conference Board, and it captures the level of confidence that individuals have in the economic activity. A high level of consumer confidence stimulates economic expansion, while a low level drives economic downturn. So a higher reading here will be considered as something positive, but from what we have here on the calendar, we do not have any data to work with. But most of the time when this kind of scenario happens, an hour or two before the event comes up, we will be seeing some data to work with. Then we have the JOLTS job opening, which is a survey done by the US Bureau of Labor Statistics to help measure job vacancies. It collects data from employers, including retailers, manufacturers, and different offices each month. So on this one, a higher reading, of course, is considered as positive. So we have the previous data for the month of June at 9.582 million, and we have economists projecting a 9.465 million. It's a little bit on the lower side, but it's still within reach with the previous data, which is of course a sign that we might likely be seeing, looking forward to a contraction in that sector. So we shall be looking forward to all these events for today. And of course, as technical traders here, what we are going to be doing is to sniff through the market structure, looking out for structures and patterns that we want to be using to guide our trading activity for today. So with that being said here, and with the information we have gathered, let's dive right into the business. And as usual, the first asset on our watch list is the US oil spot. Now on the US oil spot, so far in the last 24 hours, we've seen how the market has been tending towards a bullish momentum. Now before we go into the details here, I would like us to run through from the higher time frame, have a top-down analysis of what went on during our live session yesterday and what led to the idea of buying this asset today, in the last 24 hours. Now the first time frame we are going to be heading to is the 4 hours time frame, where we started our analysis for this week. Now on the 4 hours time frame, we spotted the scenario here. I would like to zoom this out so that we can capture a long-term view here. So on the 4 hours time frame, we took into consideration the nature of price action since the month of June, and we were able to come up with the fact that price action has been on a strong bullish momentum since then. And to further emphasize that, we connected a series of higher lows, giving us an ascending trend line to work with for the week. And you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, in addition to that ascending trend line, here is that important level we were able to spot at the $78.50 level, which has been a strong buying niche in this market since the month of July. As you will see, every attempt by the sellers to break through the structure has been met with strong resistance from the buyers. You can see what has been going on here. In fact, till a couple of weeks ago, and in fact last week trading session, we saw, despite the strong bearish momentum during the course of last week, we saw how it became difficult for sellers to break through that area, as we saw sharp rejection of that zone, to further emphasize how strong the buyers are at this particular point in time. Now, with this perspective in mind, another thing that makes that zone very interesting is the fact that it also shares a confluence with that ascending trend line. So lining up with the demand zone is the ascending trend line supporting the idea of buying the US All Spot. Now, to guide our trading activity for this week, we spotted a key level at the $80 mark, which of course we said we are going to be using as our key level for the week, and of course we'll be serving as a yardstick to guide our trading activity. And you know how we use our key level. When price breaks out of the key level, we look out for buying opportunities here. And one interesting thing about the key level here is that it also shares a confluence with this descending trend line, where the breakout of both the key level will have breaking out of the trend line, and that will be a signal that the trend line may no longer have the capacity to continue to negate the bullish attempt, hereby giving us an opportunity to get ready to buy. Now, you'll see how crucial that structure is, that is around the $80 area. So what we did here yesterday is to scale down into the lower time frame to see how market participants was reacting or relating to that key level during the early hours of the week. Now, when we scale down into the 1 hour time frame, this is what we were able to come up with. Now, remember, that is the $80 level, which happens to be our key level. And of course, we saw here how price action was caught within a range prior to our live session yesterday. You saw this. We saw price confined within the $80 level, and of course the $79.50 level, to emphasize the level of uncertainty in this market. And for those who have been with us in this community for a while now, you know how we do it. Whenever we have a range like this, we want to exercise patience, waiting for either a breakout for buying opportunity of the range or a breakdown for selling opportunity of the range. And considering the fact that price action is sitting on a strong demand zone on the higher time frame, we were tending towards a bullish momentum. And we said the only condition that will make us want to sell is for price to break down the support line, then retest the structure for confirmation before we jump into a sell position. However, for buy position, we agreed here that we are going to be having a buy stop order sitting above the $80 level to capitalize on the bullish move. And in fact, we saw the breakout happen about a couple of hours into the New York session yesterday, and price moved significantly well. I think it moved about 63 pips in profit before the bearish momentum began. And in fact, if you had moved your stop loss accordingly, you must have been taken out in a worst case scenario break even at that point. But price action came back again this morning to climb above that structure, and then currently we have about 43 pips running in profits at this point in time. Now, for those who are taking advantage of this opportunity, well done to you for being on standby to capitalize on this move. Now, the next thing we want to be doing, as you all know by now, when price moves significantly well in our favor, the next thing we want to be doing is to secure the current position by moving our stop losses. Now, at this point in time, I'm of the opinion that moving your stop loss to your entry point right now or the entry zone seems more reasonable, as we also need to give enough room for price action to breathe. So with a well-secured position at this juncture, what is going to be our next line of action for this week? For today, sorry. Are we going to continue buying the US oil spot, or is it likely that sellers could come in at any point in time to take over this market? Now, considering the strong bullish potential in this market, I will first of all talk about the potentials of buyers. Now, looking at the range we have here yesterday, we can see price has broken out of the resistance line, which is something very positive for buyers here. And as long as price remains above our week's key level, which is situated at the $80 mark, we shall continue to hold on to our bullish buyers while we also look out for more opportunities to maximize that bullish momentum. So as a result of this, we have another level at the $80.60 level, which happens to be the highest zone where price action has been for this week. And that is the $80.60. We saw what happened here during the New York session, where as soon as price got into that level, we saw selling pressure resume to push price to the downside. And right now, price action appears to be gradually approaching that level. So one thing we are going to be doing right now, we've moved our stop losses, we've secured our position. So we want to see how the market is going to be reacting to the zone to determine what our next line of action will be. And of course, a breakout of the structure definitely will be giving us more opportunity to capitalize on an uptrend scenario. Then I would like to state something clear here, as there are two ways to which we can capitalize on this uptrend scenario. Now, for those who have been profitable so far, that is those who took advantage of this opportunity we took here at the breakout of the $80 level, definitely by the time price action breaks out of the $80.60 level, you will still be in profit in this market. So you can afford to leverage on the profit you had so far to test waters around that area. So placing a buy stop order above the $80.60 level seems most appropriate, as you are not opening your portfolio into any risk at all, as you are only leveraging on the profit you had made so far. So if price action then goes on to take us out, then we are only losing what we have made, hence we will be on break even. But for those who are joining us for the first time, and if this is your first trade you are going to be taking or joining us for this week, then I will be suggesting that you wait for the technical expectation of a retest of structure as a confirmation before jumping into this position. So if you are new, what you are going to be doing here is to wait for a breakout to happen, then scale down to the lower time frame. It could be the 5 minutes, 10 or 15 minutes time frame to look out for confirmations, which would reflect on the chart as a retest of structure, appearance of buy pressure to join an uptrend continuation. So this is how we are going to be buying the US oil spot for today. So as long as price remains above our key level, we continue to hold on to a bullish bias. However, in as much as we're looking out for buying opportunity here, you know how we do it in this community. We always ensure to keep tabs with the opposite direction too as well, just in case price action moves in the opposite direction. We of course want to be on standby to capitalize on that move if it does happen. Now, in this market structure we have here, what is it that will make us want to start considering selling? Well, for me personally on this one right here, before I can start considering selling on the structure, I would want to see selling pressure resume again along the $80.60 level, as you will see here. But since we have some buy pressure around the $79.50 level, as you will see here, since last week Friday, sellers have found it difficult to break through the structure. And for me, because of the fact that sellers are finding it difficult to break through that area, it's serving as a platform for buying opportunities for this week. Now, if I am going to consider selling, I would rather want to see price action slice through that level, taking out all the buy positions within the $79.50 zone to get a bearish signal, after which a retest of structure will be confirming a potential downtrend. And in fact, by that time, price action will be back below the descending trend line we identified earlier hereby confirming that we are within a seller's territory, giving us the comfort to join a sell move. So let's see how the market will play out here, but I doubt if a selling opportunity will come in this market, as all the current market structure right now is screaming higher highs at this point in time. So let's see how the market will play out. If you have any questions whatsoever as regards to the current setup or my illustration so far, feel free to drop your enquiries in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your charts. All right, so I see a couple of comments here. Komia, good morning to you. Glad to have you around. Nikki74, good morning to you. 80913, 2251, and 33876, good morning to you all, and thank you for checking on us here. So with that being said here, and in the absence of no questions, I want to assume that we are all on the same page. So we shall be moving right into the next financial asset on our watch list. So the next financial asset on our watch list for today is the USTech100, popularly known as the NASDAQ. Now on the USTech100, so far so good. We've had a buy position triggered, and right now we have a buy position currently running in profits right now. And for those who took advantage of this opportunity, well done to you for being on standby to capitalize on that move. Now, before we go into the details, let's run through, for the sake of those who are not part of the live session yesterday, let's run through the higher time frame quickly to have an holistic perspective into what is going on and what led into the decision that we made of buying the USTech100, so that we can all be on the same page. Now, I think we started our analysis on the 4 hours time frame, I guess. Let's see. I think so. I think we started on the daily time frame, where we confirmed the uptrend here. You can see since the beginning of the year, price action had consistently found higher highs and higher lows, giving us an ascending trend line, as you will see here. And in fact, price action had consistently respected that trend line. And if you look at what has been going on here in the last couple of weeks, you will see how it has been difficult for sellers to break through the trend line. And with the continued appearance of buy pressure around the zone, it is more reasonable we look out for buying opportunities. Now, when we scale down into the 4 hours time frame, we begin to find a simple setup here that we said we will be using to guide our trading activity for this week. Now, let's run through the 4 hours time frame quickly. So now on the 4 hours time frame, what we did here yesterday was to monitor our market participants as reacted to this market since the beginning of this month. And of course, it has been of lower highs and lower lows in this market, further emphasizing the strength of the sellers, which could be a retracement of some long-term bullish momentum, of course, and we have a descending trend line to work with. Now, last week's trading session, we witnessed the breakout of that descending trend line, as you will see here, which from a technical standpoint is a sign that we are likely going to be having a momentum shift, as the descending trend line may no longer have the capacity to continue to negate the bullish attempt. And you all know from a technical standpoint, whenever we have a breakout of a structure, such as the trend line we had here, we expect that at some point in time, price will come back to retest it to incite an uptrend continuation. Now, with this perspective in mind, we were looking at the potential of an uptrend scenario here after price action came back to retest the trend line. Then we also had an ascending trend line here to help us guide our trading activity for this week. Now, to help us for our entry point, we had our key level situated at the $15,000 mark, where we said if price remains above that structure, we shall be looking out for patterns and structures that will support the idea of buying that asset. Now, scaling down into the 1 hour time frame, we needed to see how the market participant will be reacting to that $15,000 level to give us an idea of where price action is likely going. Now, when we scale down into the 1 hour time frame, this is what we saw here. Now, at the beginning of the week, we saw an indecisive phase here where price action was confined within that key level, had the $50,000 mark, and of course the 14,930 level. And you know how we do it whenever we have this kind of flat channel. We want to be waiting patiently for price action to give us a signal, which of course will come either in the form of the breakdown retest of the support line for selling opportunities, or the breakout retest of the resistance line for buying opportunities. And as a result of this scenario here, we positioned ourselves right above the key level at the $15,000 mark, and in fact, an hour into the New York session, we saw price broke out of that structure, though we had some volatile movement. But remember, our stop was placed right below the support line of this range, and till that since yesterday, price action had continued to find higher highs. And for those who took advantage of this opportunity, you will currently have about 73 pips running in profit right now. Congrats to everyone who are taking advantage of that move, and what we are going to be doing next is to ensure that we secure our current buy position. Now, to secure the current buy position, I'm of the opinion that anywhere below the $15,440 and the $15,010 level seems most appropriate to lock in some profit. Remember, we of course do want to be given enough room for price action to breathe, so that whenever it retraces a little bit with the attempt of continuing to the upside, we will still be in the position. So with a well-secured position at this point, what is going to be our next line of action? Well, the first thing I would like to acknowledge here is the fact that since the beginning of the week, it has been more of a bullish momentum as we have witnessed higher lows in this market. So if we connect the series of higher lows here, I think we have a trend line to work with for today's New York session. So we have an ascending trend line spotted. So I would like to give this a green color and then zoom right in. Then when we bring back our candle chart, we can do some little adjustments so that it can capture majority of the pivot lows, as you will see. So this is what we have right now. So we have a trend line to guide our trading activities for today. So what this simply means is that as long as price remains above this trend line, we shall feel comfortable in our buy position, while we also look out for more opportunities to maximize the potential of this bullish momentum. And it will also serve as an area where we can place our stop loss, as we want our stop loss right now to be anywhere below that ascending trend line. Now, going into the New York session, how do we intend to be part of an uptrend continuation here so that we can add more position to our existing trade? Well, if you look at the structure here, you would notice that this is the highest point where price action has been so far this week, which is at the $15,000 mark. And at this point in time, I would like to see price break out of that position to give me more opportunities to buy. Now, for those who are already profitable on this asset, you can afford to have a buy stop order above the 15,100, since we will be leveraging on the profit we had made so far this week to risk and test waters around that area and see if that buy opportunity will click. However, if you are joining us for the first time, then I will suggest you remain patient, wait for the breakout to happen, then scale down to the lower time frame like the 5, 10 or 15 minutes time frame to look out for signs that sellers are finding it difficult to stay below the 15,100 level, which of course would reflect on the chart as retest of structure to join an uptrend scenario. However, we should also note that there is still a possibility of price coming into the 15,060, which shares a confluence with that ascending trend line to incite an uptrend scenario. So on this market structure, the trend here, the sentiment is still looking very, very bullish here. So we have that ascending trend line to guide our trading activity for today. Now, in as much as we're looking out for buying opportunity here, we cannot ignore the potentials of sellers. And the only condition that will make us want to start selling today is for price to break down that ascending trend line. Now, if price action breaks down that ascending trend line, it will have also broken down off this key level at the $15,060 mark. Now, if this happens, this is likely going to be a momentum shift. But one thing we don't want to be doing here is to be getting too excited and joining right away. So instead, we are going to remain patient and wait to see if truly this is a breakdown or a false breakdown. And to confirm that, we want to seek confirmation such as retest of structure on our lower time frame before jumping into a sell position here. So this is how we are going to be managing our trade on the USTech100 for today. If you have any questions, let me know in the comment section. You do want to be marking out these levels as you will be needing them as a reference point to guide your independent trading decisions for today. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next financial asset. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset on our watch list. All right, everyone. The next asset on our watch list for today is the GBPUSD, the cable market. And in fact, in the last 24 hours, it appears we are yet to have an headway in this market as the tussle still continues between the buyers and sellers around this area. Though we had a little break out of the range, but it appears that buyers are still struggling to gain that momentum. So I would like us to run through what led into the idea that we have in the market right now and how we are going to be anticipating to this trading opportunity. So first of all, let's scale up into the higher time frame, where we shall be looking at things from an holistic standpoint, and look at what we have here on the daily time frame. Now on the daily time frame, it is quite clear that since the last quarter of last year, price action has been on a strong bullish trend. And we went a step further to connect the series of higher lows here to give us, in fact, a couple of ascending trend line that you can see on your screen right now. And in fact, price action has been respecting this trend line, and at this point we also identified a key level that we said we will be using to guide our trading activity for this week. So we had a key level identified at the 1.2600 area. As you will see, this level had been a major determinant of price action since the month of May. Look at how it was a selling niche at this point here before price action broke out of the structure in the month of June. So we saw the breakout, and since the breakout happened, price action had remained above the ascending trend line, above the key level at the 1.26, as you will see here. And in fact, in the last couple of weeks, we have noticed how sellers have been struggling to break through this area. Now, one more interesting thing about the structure that makes this area very crucial juncture in the market is the fact that the 1.26 and the ascending trend line here shares a beautiful confluence, giving us a clue into how important this is, and of course giving us an idea into the potentials the sellers and the buyers have here. So both the sellers and buyers have the potential of pushing price action in their favor. Now the question that we were asking heading into the new week was, will price action respect the ascending trend line one more time to incite an uptrend continuation, or are we going to witness a scenario where the breakdown of both the ascending trend line and the 1.26 level will be welcoming a sell-off? Now with this scenario here, you see how where price has been. Price closed around this zone last week, and since the beginning of this week, price has been trading around that area, giving us an insight into the level of indecision at that point. Now, if you look at this from afar, it's looking as if price action is transitioning into a reversal pattern in the form of a head and shoulder pattern. If you look at this closely, we have the left shoulder, we have the head, and of course we have the transition of the right shoulder, as you will see here, where the 1.26 level will be serving as the neckline. Now, for this reversal pattern to be validated, then we would need price to break down the 1.26, which is serving as the neckline, to give us a signal of a downtrend scenario. But since price action still remains around that area, we need to be very patient to look out for patterns that will guide us accordingly. Now, in order to do this, we will need to scale down into a much more lower time frame to see how the market's participants have been reacting to the structure. Now we scale down into the 1 hour time frame to see what has been going on since the beginning of this week. Now looking at the 1 hour time frame, this is what we were able to come up with. So at the beginning of the week, we saw how price was confined within a range that is between the 1.2600, 1.261-ish, and the 1.25790 to give us a flat channel to work with. And whenever we have a range, you know how we do it. We look out for either buying opportunities at the breakout of the resistance line or selling opportunities at the breakdown of the support line. And during the live session yesterday, I told us all that I already had a sell position triggered, and of course, unfortunately, that sell position went into a stop loss as price action continues to find higher highs in this market. So we saw price led to the breakout of the key level, had the 1.260 to trigger our first buy position for the week. And in fact, if you are taking advantage of that move, price action moved about 32 pips in our favor before this bearish momentum came in, taking us out of all the buy positions we have here. So right now we are at a critical point in the market where price action is back into that key level we identified on the higher time frame. So you can see price is trading around that key level. So we want to exercise some patience here to see how the market participant will be reacting to this level to decide what our next line of action will be. Now, to guide our next line of action, we have an ascending trend line. As you will see, since last week Friday, price action has been finding higher lows in this market. So we connected a series of higher lows to give us this trend line. So if price continues to remain above this trend line, we shall continue to hold on to a bullish bias. And the only condition that will make us want to sell this asset is for price action to slice through both the ascending trend line and that key level to the downside, retest of structure. Then we have multiple levels here where we can capitalize on the downtrend opportunity. So that is the only condition that will make us want to sell the GBPUSD for today, and I do hope that we will be on standby to capitalize on that move when that structure finally gets broken. But if price still remains above the ascending trend line, which is looking as if it will, well, we shall continue to look out for more opportunities to buy. Now, there are two ways to which we can buy from this particular area. Now, the first thing I would like us to note here is the 1.26300 level. This level had been a buying niche at some point in time this last week, as you will see here, before it was broken to the downside. Then since that moment, price has been trading below that area, as we can see continuous selling pressure anytime price action comes into that zone. So this area here gives us a sign that sellers are very strong here, of course, and it wouldn't be if we are going to be buying around that area, we want to be very, very careful, ensure we move our stop losses accordingly, lock in our position if price moves significantly in that direction. So at this point in time, there are two ways to which we are going to be buying here. The first one here is for us to, if you are a cautious trader, you want to wait for a significant breakout of the 1.263, where price action will be taking out all the sell positions within the zone to give us a bullish signal. And then we wait for a retest of structure on our lower time frame to be part of an uptrend continuation. So that is one way to look out for buying opportunity from this current market structure. The other way that we can look out for buying opportunity here is around the 1.2600 area, which of course also shares a confluence with an ascending trend line. Now, to look out for buying opportunity around this area, we want to see buying pressure emerge from the zone on our lower time frame. We want to see patterns like double bottom structures, inverse head and shoulder patterns, falling wedge around this area. So to give a visual representation of what to look out for here, we can expect something like this. Price does multiple rejection of this area, transition into a double bottom structure, breakout retest of the neckline, welcome buying opportunities, after which if price continues to the upside, we then had more positions at the breakout of the 1.263. So this is how we are going to be managing buy position here. But one thing for sure you would have realized here is that as the key level at the 1.26 and the ascending trend line is going to be serving as a key role that will be determining where price action will be going today. So let's ensure that we be on standby to capitalize on that opportunity after monitoring how participants will relate to that structure. So these are my views here on the GBPUSD. It's a simple setup, so you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your trading activity for today. If you have any questions, feel free to let me know in the comment section. I will be willing to be of help in that regard. So I'll be taking the next 10 to 15 seconds. Let's see if you have any questions whatsoever before we move on to the last financial asset on our watch list for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today is the XAUUSD. And the XAUUSD has done pretty well in the last 24 hours as we took advantage of a buy position, and in fact we bought it at the breakout of this trend line and the 1916. And in fact, for those who missed out on that opportunity, the market was so kind enough to come back and retest that structure to inside that move to the upside. And remember that we had a couple of levels here that we identified during our live session yesterday to help us capitalize and maximize the potential of this move. So we had levels like the $1,917.60 level. We also had levels at the 1,920 to capitalize on this opportunity. So these were the two levels I shared with us here during our live session yesterday. And in fact, if you are taking advantage of this opportunity, we saw our price moved over close to 100 pips on the first position here, and of course on the second position here it moved about, how many pips was that? About 80 pips, making 180 pips, while the third position here moved about 60 pips, giving us over 240 pips in profit before the sell position began. And for those who are taking advantage of this opportunity, well done to you for being on standby to have capitalized on this move. Now, with that being said here, I hope by now you should have been out of this trade. If you had moved your stop loss, you must have been out of this trade, of course. Now, with the current situation we have here, what is going to be our plans for today? Well, let's run through how the week started for us so that we can all be on the same page. And of course, whenever I'm talking about the structure, you will really understand what I mean, since you're on the same page. So we shall be scaling up into the higher time frame. So I think we should start from the 4 hours time frame in this case scenario, as this is where the structure is dictating the pace here. Now, if you look at the 4 hours time frame, it is quite clear that price action has been bearish since the last week of the month of July. And to emphasize the strength of the sellers here, we connected a series of lower highs which gave us a couple of descending trend line which has been supporting that bearish momentum in the last 4, 5, 6 weeks now. With the situation we have right now, there is a key level we spotted here yesterday which is situated around the 1,920 level, which of course we said we were going to be using to guide our trading activity for this week. And you know how we use our key levels. When price remains above the key level, we look out for patterns and structures that support the idea of buying that asset. But if price action eventually breaks down the key level, we want to be looking out for patterns and structures that support the idea of selling. Now, if you look around that key level, you will see that since price broke down the structure on the second week of the month of August, we see here how sellers have been dictating the pace. Now, every attempt by the buyers to break out of this zone has been met with strong resistance from the sellers. Look at what happened here a couple of weeks ago. Look at what happened last week. Despite the strong bullish momentum we witnessed last week, we saw that as soon as price got into that area, we begin to see sellers' pressure negating all buyers' attempt. So despite the fact that we bought this XAUUSD yesterday, I told us all that we are still within the seller's territory. Hence, we want to be on standby to move our stop loss accordingly when price action moves in our favor. And that the only condition that will make me feel comfortable in a buy position is when the supply zone here is broken out of outrightly, and of course the two descending trend line is broken out of. But at this point in time, those trend lines are still holding. As you can see, price action is back into this major trend line, and in fact we have been noticing selling pressure around this area in the last 24 hours. Now, the question going into today's trading session is, will this trend line be respected one more time to push price to the downside? Or are we going to be seeing a breakout of this trend line to incite an uptrend continuation. Now we have our key level to guide us for today, of course, the 1,920. So if the sell pressure continues and it drops below the key level at the 1,920, then we look out for selling opportunities below that structure to join the downtrend move. But if price still remains above our key level at the 1,920 and we begin to see buy pressure, we shall be looking out for buying opportunities. So now let's scale down into the 1 hour time frame where we begin to see things more clearly. Now right here on the 1 hour time frame, this is the structure we have here. Remember, we had this range which was finally broken out of yesterday, and of course we also have the descending trend line which was also broken too. So the descending trend line is the major one right here, so I will just delete this one and leave the descending trend line highlighted. Now we have noticed that as soon as price got into the 1,926, we saw selling pressure here during the New York session, and in the last since the early hours of today we saw another selling pressure here. So it means that that is a barrier for buyers at this point in time, and it could turn out to selling opportunities which could trigger some profit-taking activities, as those who bought the gold at a cheap price here might likely want to be doing some profit taking, which would reflect on the chart as a retracement move. Now if you look at the structure from a technical standpoint, you know we expect that technically when price breaks out of a key structure such as the descending trend line we spotted here yesterday, we expect that some point in time price is likely going to come back and retest that structure with the anticipation of an uptrend continuation. Now, with the way things are going now, with a continued rejection of the 1,926 level, it appears that sellers are gradually gaining some momentum here. How far will this momentum go is what we don't know. So at this point in time, I'm considering this selling pressure here to be a retracement of this impulsive move where we don't know how far it will go. But I think we can use the levels we have on the charts to guide our trading opportunities going forward. So for counter trend traders who took advantage of this opportunity, it's okay. You still have the potential of price action coming back to retest this descending trend line was broken to anticipate an uptrend. So we want to see how the market will be reacting to this trend line to determine if we are going to be adding more sell position, if price will be dropping, breaking down that structure, or if we are going to be seeing buy pressure around that area, get ready to join the uptrend continuation. So we have multiple levels here which we are going to look out for and see how the market will react to them. So we have the 1,920. Let's see how the market reacts. If it breaks down the level, then we go forward to look to see how the market will react to the $1,917.60 level. And if of course this level is broken again to the downside, we wait again and see how it reacts to the 1,916. If it breaks to the downside, we continue like that all the way into that resistance line. But if any of these levels we begin to see some buy pressure happen, something like double bottom structures or head and shoulder pattern, then we want to be getting ready to join an uptrend continuation. So let's keep this in mind while we continue to monitor price action around this area. For those who join the selling opportunity below the $1,924 area, move your stop loss to break even while you wait and see how the market will be reacting to the structure to determine what our next course of action will be. But one thing for sure here is that things are looking bullish, though we're still within the seller's territory. But let's see how the market reacts to these levels. If we start seeing reversal patterns, buying pressure around those areas, then let's get ready to buy. But if price action continues and continues to drop, breaking down the 1,912, then we'll continue to look out for more selling opportunities in this particular market. So these are my views here on the XAUUSD, popularly known as the gold spot. And in fact, let's see how the market will be reacting to the structure. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide and make your own independent trading decisions for today's trading session. So these are my view here on the XAUUSD. If you have any questions whatsoever regarding the current setup, or you need me to do a clarification on whatever I talked about earlier, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we draw the curtain for today's trading session. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So it's on this note I will be calling it a day. And in fact, we were able to attend to 4 financial assets. In summary, we talked about the USOILSPOT, we talked about the GBPUSD, the USTech100, popularly known as the Nasdaq, and of course, we closed with the XAUUSD, popularly known as the gold spot. And on all of these assets, we were able to use simple parameters such as trend lines, key levels, and chart patterns to uncover and give us valuable insights into the historical price movement of all of these assets. And we have a simple trading setup to take advantage of. And in fact, I am very confident that we shall be on the verge to take advantage of an opportunity today. All I just encourage us to do is remain patient. Let's wait for our structures to mature before we jump into a position. And for those who joined us for the first time today, I do hope you gained 1 or 2 things from what we discussed here. And trust me, the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you have gathered here to make your independent trading decision. So I look forward to seeing you guys all in the next session tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well these assets have been doing so far, and at the same time get ready for tomorrow's trading session. Thank you for your comments, Murphy J. I saw your comments. Thank you, 6658. And everyone do have a wonderful evening. Bye-bye.